With that, let's quickly get into our final corporate conversation on Bazaar for this morning. V-Mart Retail, like we've been telling you, the stock has been holding up. Last I checked, it was still up about 3%. Let's pull up the stock price on the screen. Can we do that? Yeah, there we go. Okay. It's cooled off a little bit from the opening highs. But the fourth quarter business update has been looking very good. 17% revenue growth, same-store sales growth at 8%, which is even better than what they did in the third quarter. Mr. Lalit Agarwal, founder and managing director of V-Mart Retail, is with us. Mr. Agarwal, thanks for joining in. It's good to hear, good to see, good to note, and you've been managing those growth numbers despite this ongoing, slowdown that is being spoken of. Tell us, Samin, what's driving it? Is tier 2 demand still strong, and is it all volume, or is there any elbow room to look at pricing growth as well?
Hi, good morning, Survi. No, definitely, there's a lot of work which has gone behind this, and we have been struggling for the last 3 years, but yes, this year finally has been a good year where we could achieve our growth back to what we wanted. So there's a lot of changes that we have done in the organization, but yes, definitely we are also seeing the mass consumption and the rural consumption inching up a little more, becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very, enlightenment. We're really getting good news about that volume growth. And this is also being led by fashion, because there's a lot of fashion change which is coming to the market. And that is also something which is driving a little more consumption, because consumer now need a little different wardrobe in their house. These are largely also led by Gen Z and that particular population, that age group. That is something also that we are trying to drive.
No, absolutely. And full marks to you and your team, because this fast fashion category is also fast moving, right? Fast moving fashion. And it's fairly competitive as well. Lots of players in this space. So just tell us, given the strength that you've seen in the fourth quarter, and I think you'll be ending FY25 exceeding your guidance of 15% top line growth. Now, FY26, what is the kind of growth aspiration that you'd like to put in place? Volume growth, or rather, let's say top line growth and same-store sales growth that you would like your teams to deliver in FY26?
I think we definitely want to replicate this result that we have done in the last year, and we will want to have better outcome, because we are getting the grip over the business. We are getting the grip back on the fashion. There are a lot of competition which had walked into our space for the last 2-3 years. So now most of their effects have got neutralized. We are seeing them deperforming now. So I think we are gaining back some consumer. More consumers are walking into organized retail, which is a good news. And then consumers are also shifting bases from ineffective or improper retailer to a proper retailer, because we are trying to focus more on quality. We are actually trying to focus more on our repeat customers, and our repeat customer sales to drive up to 75%, which is right now hovering around 70%.
Okay, all right. Hi, Mr. Agarwal. Good to see you on the show. The total store count, I think the net addition last year was close to around 50 stores?
Yeah.
53, I think so. So what
This last year, we have added 62 stores.
62 stores.
Gross number. But we also closed down 8 stores. We also closed down 8 non-performing.
Yeah, that's how I come to the net addition of around 53 stores for the year, roughly. For this year, what kind of store addition are we likely to see? Point number one. And SSG, what should the growth number look like for this year? Last year, I think it was around 11%, which was relatively higher in comparison to what you were guiding of high single digit. No. All right, I think we've got you on a bit of a scratchy line, Mr. Agarwal. We'll try to get you back. Last year they added a net amount of stores of around 53 stores. That's including the additions and deducting a couple of stores that they are shut. I think we have Mr. Agarwal back with us. Mr. Agarwal, you're making that point. Please go ahead. Number of stores you're looking to add and SSG growth for the year.
Yeah. Of our square feet addition every year, we have been consistent for a decade, and then that is what we would want to again add. So maybe adding around 62 stores or 65 stores on net number. That is what we would target even the coming year. And then definitely numbers will definitely come back. And there's a lot of hue and cry going around consumption in rural, consumption in urban. FMCG companies have not been reporting too much. So, but yes, there is a lot of fight going on. The middle class, the lower middle class consumers still don't have too much of money to spend on these areas. They are definitely gaining back. There is a lot of tax rebates that government has given. That is also helping the consumption. And we expect some more consumption coming in from, especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoons remains good this year as well, we would definitely clock another, once again, almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for on the like-for-like.
Okay, all right. Thanks for joining, Mr. Agarwal. You've revamped your business, as you're saying. You've put in a big effort to deliver these numbers, and we look forward to chatting up with you at the end of Q4 numbers and then lay out the path for FY26.